Fed policymakers remain divided over the need for more rate cuts this year. Joining us now, Independent Institute senior fellow Judy Shelton. She's a former Trump Fed board nominee and on set with us on this Veterans Day. It's good to see you.
Good to see you. Thanks.
Make some interesting points. They're always sort of compelling, and that is that even the 2% Fed target is well above what the dual mandate actually set when it was Humphrey Hawkins or whenever they decided we were going to do it. It was zero, which is something you think should actually be a goal. Zero for pure price stability, the most important thing of the dollar.
Well, that's the definition of price stability. The Fed often quotes its mandate, stable prices, but that isn't what they shoot for. They shoot for stable inflation, and they don't have a very good record of achieving that. Why 2%? The idea is you have a money unit that's dependable, that's trustworthy. And that was what the founders had in mind, that when Congress was given the power to regulate the money, it was in the same sentence as defining official weights and measures, because money was meant to be an honest measure. So is 2% a policy of deliberate debasement because you think you can chisel away the purchasing power of the money that people have earned through
or how
honest
much you have
labor?
how much you have to pay back
won't notice
from how much you borrow. It's easier to
Sure.
pay. It's easier for debt service on our total debt, right?
Well, yes. Because
so there's reason to want to do it.
Yes, but that's in the government's interest, not in the interest of individuals in the private sector who define really their plans in life and for their family in terms of being able to count on a reliable store of value.
But if they can't even come close to 2 and with any accuracy, and you're trying to get to 0, what if you overshoot and you have deflation, which is even worse than 2% inflation, isn't it?
Well, a little bit of deflation is actually the natural way of economic development, because you gain through technological improvement, through productivity improvement. So actually a little bit of deflation would be the natural state of being. We should expect that. So I'm not uncomfortable with that.
So you think that they meant 0? They said 0. They meant 0. Let me ask you this then. So we're well above that. We're probably what's your best guess where we are? Are we at 3% right now?
You know, I don't really have much faith in the different measures. The fact that there are different measures. I mean, people get compensated on Social Security and on TIPS bonds based on the Consumer Price Index. But that's not the PCE indicator that the Federal Reserve uses. So as soon as you start having these malleable indices of the real impact of prices, there are now new ones coming out to show what it's like for an average American family, where they're experiencing price inflation for goods and services that matter to them.
That's a really good point. Are we fair in the way we do it with the Social Security premiums that we bake in every year?
Well, the problem is it kind of perpetuates inflation. But on the other hand, I feel very strongly that the fact that the Fed does deliberately debase purchasing power, all you're doing is trying to let people stay even. Yeah. And why make it so confusing that you always have to talk about inflation-adjusted numbers?
Mm-hmm. But here's where it gets sticky. So I don't think you want the Fed to raise rates, even though we're well above probably the inflation target. And in fact, I think you want them to lower rates, but for different reasons. You think that their whole method for handling inflation or curbing inflation is not the right way to do it. And you in fact, Powell's last more hawkish comments, you view that as trying to hurt the Trump economy for political reasons or trying to gauge as if he can tell the effect of tariffs when we haven't really seen much. You think that not wanting to go lower is political, yet you want to get to 0 on inflation. So it seems like we should not be cutting.
Well, that's if you accept a Fed model, which is very Keynesian, that says that you have to fight inflation by restricting growth.
So that whole thing, that whole thesis, you don't buy.
Well, it doesn't work with supply-side economics. I think that the Fed's approach with these Keynesian models ignores the impact of lower taxes and less regulation. which increases supply. And when you have a government that runs a perpetual fiscal deficit, and the Fed is trying to fight that by restricting growth and raising interest rates, what you're doing is empowering government, because they can always pay whatever rate they have to borrow money.
Right.
But it's at the expense of the private sector, and particularly small and medium-sized business.
So the whole way we're even managing this, the Fed is causing some of the problems that we experience.
Well, I think the Fed prevents access to capital, and that's how you gain real prosperity, by people who actually produce real goods and provide real services. I noticed on the show today, you really talked more about values and virtues and the golden rule. And I really think we need a renaissance in this country, and call it the golden age. But we should focus on the importance of honest work and honest government and honest money. And by that, I mean we should celebrate people who do things that create real prosperity, not just who arbitrage financial opportunities that are caused by the anomalies in our monetary and financial way of doing things. We should demand honest government. I mean, perpetual deficit spending is immoral. It's corrupt. You're creating purchasing power based on future goods and services that have yet to be produced. And I think that we should guarantee honest money. And that's what I have, this proposal that Treasury should put out a gold-backed long-term bond. So at least for some specialized issuance, and you can tie it in, make it available starting July 4th, 2026. But let people who want to purchase this bond, kind of like a TIPS bond, be compensated for losses in purchasing power, because at maturity, they have a feature where they could convert and take the principal back in terms of a pre-specified amount of gold.
This product might compete with Bitcoin. Ultimately.
Or you could use Bitcoin, theoretically, if you're a believer.
Well, I'm just saying, for some people, gold, and it is the second favored global reserve asset now. I was in Europe a couple weeks ago. They're very concerned about that. The euro's been squeezed out. And here you have the U.S. with the dominant reserve currency, the most gold official reserves of any country in the world.
Supposedly.
Well, you know, I would capitalize on that.
Yeah.
Because this is part of this lack of trust in government that we need to combat. If President Trump could walk through Fort Knox, you have bills coming out of the
He would
Senate.
love that, by the way.
He
loves gold.
It would be a PR bonanza, and it would create so much demand for gold-linked Treasury bonds. He'd be the first president since Nixon ended Bretton Woods to relink the dollar to gold, that it would be the cheapest way for the government to borrow. It would be oversubscribed, and then that would become a marker. Right. And it would say, we're trying to move toward sound finances and sound money.
Well, let me ask you this. Do you think that the positive tailwinds that you mentioned, and because we've seen deregulation some, and we've seen lower taxes some, do you think that the Fed can continue to ease and lower rates, and that inflation will come down naturally from the positive productivity gains from those things, or do you think they need to stay? Would you cut rates still?
Yes, I would. And I think the labor numbers that just came out suggest that it's the small business, because that's where the hiring comes from. That's where you need to have more jobs, and that requires access to capital. I think it's a mistake for the Fed to deliberately restrict access to capital through high interest rates.
To try to slow the economy, to try to bring down inflation. It's all sort of a,
Right. I would
it's almost a Rube Goldberg scheme to try to do it.
Increase output. That's the way to fight inflation. And I mean, Paul Volcker believed in that, and he fought inflation with high rates, but he believed that the real problem was the lack of a balanced budget, and that he really came on strong and told Congress about that. That's what we're missing from the Fed today. We always talk about, well, fiscally, it's unsustainable in the long run, but no one ever says, all right, this is day one of the long run.
Right.
What are we really going to do? And I think we saw this last fiasco of a government shutdown because we can't handle this basic government function of running a balanced budget. I think that's what's so demoralizing for people and even disgusting. I think people are getting disgusted with government, and that's why we need to make some big changes.